Domestic manufacturing remains central to India's growth plan, and that focus comes through clearly in this year's budget. In Budget 2026, the government is doubling down on building at home, from semiconductors and electronics to chemicals, food processing, and even sports goods. The idea is to reduce import dependence, deepen industrial capacity, and support jobs. So, how exactly does Budget 2026 place manufacturing at the core of its spending priorities? One of the clearest signals comes from electronics and chips. The India Semiconductor Mission 2.0 gets 1,000 crore rupees, marking a new phase in India's chip-making push. The modified program for semiconductors and display manufacturing is scaled up to 8,000 crore rupees, almost double last year's allocation. Electronics components also get fresh backing. A new electronics components manufacturing scheme is allocated 1,500 crore rupees this year. Meanwhile, the PLI scheme for electronics under METI sees a lower allocation at 1,527 crore rupees as against 7,000 crore rupees in the previous fiscal year, reflecting a shift from incentives to capacity building as projects mature. The manufacturing push extends beyond electronics. 3 dedicated chemical parks receive 600 crore rupees. This is their first budgetary allocation. Biopharma Shakti is also funded for the first time, with 500 crore rupees to boost pharmaceutical manufacturing. White goods manufacturing sees a sharp rise. The PLI scheme for ACs and LED lights jumps to 1,004 crore rupees, up from 304 crore rupees last year. MSMEs remains central to the manufacturing push. The budget strengthens access to capital through multiple channels. The fund of funds for MSMEs is doubled to 1,900 crore rupees. A new SME growth fund gets 500 crore rupees. Liquidity is another focus. The government says transactions worth over 7 trillion rupees have already been enabled through the TREDS platform, and more steps are planned to improve invoice discounting and cash flows. Manufacturing needs space and scale. The National Industrial Corridor Development Trust retains its 3,000 crore rupees allocation. Plug-and-play industrial parks and corridor-led manufacturing continue to be a priority. Strategic sectors also see higher spending. Nuclear power projects receive 2,500 crore rupees, up from 1,333 crore rupees last year. Now, the budget also nudges smaller but strategic segments. Sports goods manufacturing gets 500 crore rupees for the first time. Food processing support under PM-FME stands at 1,043 crore rupees, slightly lower than last year but still significant for value-added agriculture. Now, the focus will be on execution. Will these allocations translate into factories, jobs, and exports on the ground? Well, that's the story to watch as Budget 2026-27 moves from paper to production. Follow Business Standard for more such budget-related stories.